Thank you. Let's see. $369. Yeah, that's the number. 238. Oh, that's just the low. 415, 405. Well, that makes sense. Yeah. So short. Y'all are funny. Yeah. So let's hey, good morning. May's in blue too. It's been a minute. Good morning. James, good morning. Good morning, good morning, good morning, good morning, good morning. Yeah. Well, hopefully we have a good weekend. Good morning or good afternoon from Amsterdam. Very cool. Good afternoon. Amsterdam's one of those countries that I'd like to visit one day. It's so pretty. I mean, it's like anything. I guess there's probably areas that are really pretty and areas that maybe not as pretty, but it looks pretty to me. Capital of Netherlands. Yeah. So they do those like boat tours or whatever through the rivers. Those are kind of cool. They always like advertise those on the BBC network. You've seen those? Anytime you watch like a BBC original or whatever, or like, what is it called? Like classic? I don't know what it's called. Masterpiece theater or whatever. I don't know. And they're always like, take a tour of the world. Blah, 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 blah. I don't know if that's the Netherlands. I think it's something else, but they, a similar region of the world. Anyways. Viking Cruise or whatever it is. I don't know. Well, you guys are like my core audience. You're here 30 minutes. First 30 minutes, probably the core audience. I hope you guys watched the video. And if you didn't, that's totally cool because I have no expectation that you would. It's just that I don't really want to have to go through it all again. This is kind of where I got this stuff from that video. And I don't think it's quite this simple. You know, like most things, I think there's going to be some back and forth today, and we'll see if it works out today. If it works out today and you end up with a big move up, this is kind of my expectation, is that we'd move up early today, right around 450, and then probably camp, come back down to 432, and then probably by the end of the day, back up here around 450. We might get this early move, but I fully expect us to come back to the 481 now. And I had a lot of targets yesterday that I pulled out of the hat, and I was looking at a lot of the shallow S-curve kind of stuff. There's no guarantees in the market. So if you can't get back over 431, you know, pinning is definitely a thing. And on Friday, there's not really much you can do. If it gets pinned, it gets pinned. But I don't think that 431 is going to be long-term resistance just yet. I think that we dipped down to that 786 level at 403. And I think that was just the goal, was to get down there. It looks like a double bottom kind of thing. And I mentioned this blue trend. It's pretty significant on the whole. And again, I'm not going to do like a full-on recap here. I was looking at FFIE this morning because it gapped up like 20%, but it's got to hold this level at 62.9. And I don't know if it's going to do it. We'll see. But yeah, at GME, I haven't really looked at GME. GME's closed its gap, so it did go back up. It's at that 2340 area. Looks like it went all the way to the top, didn't it? So, yeah. Anyways, it's looking good. But what I was going to say is that the video I did is kind of, I don't know, it's kind of important. So if you haven't seen it, maybe check it out. You can kind of skim through it if you want. Big picture here is sort of what I wanted to get at. And I think you can summarize it as two things. Like one, maybe three things. One, there's like a mirroring that's going on. We've talked about this before, but I wasn't sure how to measure it because I was like, well, if it's a head and shoulder structure, then it doesn't really make a lot of sense because there's no neckline to speak of. So like, how do you measure a head and shoulder that doesn't have a neckline? It's kind of tricky. You can't really do that. So I was like, well, and then I did measure it and it ended up going to like negative numbers or something. I was like, well, that's not right. But yesterday I noted, right at the end of the day, I was on the Discord and I saw that this particular shallow S-curve matched the one that we have here after kind of a three, you can call it like a triple top, or you can call it a head and shoulder type ascension, but just like a three-pronged move to the upside. When you look at the RSI and you look at the resulting action, it's really, really similar. It's not identical, but it's like really similar. And then there's also a really strong MACD. And you can see what the comparisons that I made are pretty simple. They're straightforward. Basically, I'm looking at this area and what came right before it. And then the area back here. And this is close to the end of April or early May, so right before May 1st. May 1st was a really significant date for AMC for a lot of reasons. And if you go back and you look at other charts, May 1st, that region in May 1st was really significant for a lot of stocks. For AMC, it was where we kind of started building out that last support and going into earnings. And for a lot of other stocks, that ends up being kind of the place that they take off or where they start their breakout sequence. So I'm not saying we're going to just break out and run to the moon, although I think if we were to break early, we could see 744. I think what's more likely is that we end up coasting downward into FOMC. And there's a lot going on maybe right here. The Fibonacci's are just Fibonacci's, so, you know, we can like kind of mute those if we need to. And again, I don't want to kind of like recap the whole video, but basically like this setup, okay, this came down to the 786, which is a big bounce area. And there's obviously going to be some similarities. If you can see between the two, there might be some similarities in how we react. But beyond that, that's kind of like just a comparison, like forward-thinking comparison. So like looking forward, looking forward. But then if you look at the main trend, you can see that it's actually the same trend. Because all I did is I anchored it from this bottom to this bottom, and it's currently touching where we just hit. So we're entering into this blue line. We're basically approaching this blue line the same way we approached it back here. Like almost the exact same. The biggest difference being, of course, that the way we entered here versus the way we entered here. But I even was talking about it last night in the video, and I said that even that's kind of similar if you really look back at the way this kind of bounced in and then reacted back up and came down. And then the biggest difference is that this comes lower. This did not. So this already came below that previous bottom. This never did. So pretty significant difference there, okay? This blue trend line ends up being really significant because the parallels, and you could take that blue line, and that's what these are. They're just like parallels to the blue line. If you look at the parallels, they actually match. So this ascension. So I went back and I did a bunch of them going back in time, and I didn't really do a lot of this in the video because I didn't really want to spend a lot of time on it. But they do match, like generally trajectories from the setup. So it could be that we're actually in a new channel. It's not out of the question that we break down here and then like reuse the channel later. But the big deal that I was making in the video is that if you take, and this is kind of hurts my brain, but if you take the bottom here, because remember I said it looked kind of like a head and shoulder. So forward thinking, you're kind of entering this blue line the same way. Backwards thinking, meaning like you're looking at the mirroring. If you look in reverse, you can see this is a bounce if you're going from the top backwards. So if you go from the very top of this move backwards, you can see this is a bounce onto the blue line and then back down. And that essentially we're seeing like a similar thing happening here where we've approached that blue line. So my expectation at this point is that we're more likely going to bounce down to this yellow line. We'll talk about that in a minute, I guess. But this is kind of where I'm like, oh, yeah, it's definitely some kind of mirroring structure. When you take when you take a measurement from here to the top and you go to the 50% mark, this would be like the middle of a quote-unquote head and shoulder. And by the way, a head and shoulder in a lot of ways is just an unwinding. So just because I say head and shoulder does not necessarily mean that we're going to see some massive breakdown. I don't think that's true, especially when we're talking about like a throwback. We see these kinds of things appear on bottoms sometimes, and they don't always result in some breakdown. So just FYI, okay? Like this is an example right here of one that even though it has a breakdown, it doesn't ultimately like go lower, right? So just because you have some kind of a head and shoulder like structure does not mean that your breakdown is like imminent and it's going to go ridiculously far. Again, this particular measure for this head and shoulder would be like negative numbers, and that's not possible. So unless they're, you know, baiting out another split or something, I don't know. But this is the big picture here, is that, and I hope you guys see this, I don't think this is an accident. I think it's pretty straightforward. I'm not really sure why I didn't notice it before. Probably because I wasn't looking for it, and I wasn't looking for some kind of a perfect setup here like this, but I'll do it this way so you can see it a little better. Oh, maybe. So do you see where this is going? Y'all are like, no. I sure don't, Booksy. What I'm getting at here is that this is let's not do opposing colors here. Let's do analogous colors. Sure. This is a massive unwinding. So you have like kind of a double bounce here. This is like an M structure, and then you have pop, and then you have another potential M structure. the end date for this, if you start back here at the bottom, the end date for this is indeed FOMC. So it's the 11th in the morning, and then the 12th, of course, being, the Wednesday. So yeah, so it's a very symmetrical, timed out, like unwinding basically. I didn't go from the blue line to the blue line. I don't think it's the same. It's not. And it's close. You know what I mean? Like timing wise, it's still pretty similar. We might even say since that structure's done, you should go backwards, but you get what I'm throwing out here. So what I'm trying to say is that I think that this RSI structure is indeed a symmetry for the purpose of probably unwinding positions like buy-ins, exits, right? It's all happening above this lower area. So perhaps there are some shorts covering, from the top, but I think a lot of it might also be still like an effort to kind of exit positions that weren't already exited here to some degree. So I don't know exactly the mechanics of how an institution would run a head and shoulder, but it always reminds me again of that concept of unwinding a position. And I think that's why you get the symmetry often. So yeah, so basically these are essentially like the opposite sides of that structure on the RSI. Both are entering with sort of a bullish divergence. My expectation for today was that we were probably going to see an after hours bounce this morning and then potentially see a run up to near 450. Now, that being said, there may be a need to go down today, and we're kind of seeing a little bit of a weakness, but hey, be quieter, please. My son's playing Mario Kart. Mario Kart makes people rage. There may be a need to go down and get that 786 during regular trading hours. But I thought it was kind of interesting because I did the video yesterday, and this morning when I woke up and looked at the chart, it looked like it had almost double bottomed on that blue line. So it's kind of fascinating to me anyways. I don't necessarily think that matters that much though, because again, this is extended hours. You probably want to draw a lot of this stuff in regular trading hours. So for now, in terms of like the current price action, I still see a strong bottom divergence here on this bottoming area. It does not mean that you can't make lower lows. And I made a point to say that a few times, but I'm going to repeat it because while it's kind of like, well, divergence should mean that it's going to turn. No, it's indicating like at least temporarily that there's a possibility. And we even have kind of an extended divergence. If you look at like the flat bottom here, I mean, MACD is rising on the 15-minute from the bottom that we had back on Thursday to where we are now. All of that stuff could indicate a possible turn up, but you can see like the way that RSI and MACD, especially both of those, can be kind of gamified to give you like a certain outcome. So that push up in pre-market here ultimately became oversold, and then as soon as the market opens, your RSI is really high and you can just dump it back down. So just because like you do have divergence here does not mean that the next move has to be like straight up or something. And this has happened frequently in the market in a lot of places where you'll get like so like there was another example. So we're at 415 right now. That's a possible support as well. I'm trying to remember the other place I found one. Well, maybe it was back here. Yeah, like right here. So there was an RSI divergence in this very beginning portion of the drop in back when we were at like 470. And it would even say like the same thing for the MACD in some regards. But then it has like kind of this distributive action and drops again, and then it starts again, and then the weird thing is that it does end up resulting in a turn, but not before it makes a new low. So there was clear like divergence. Both of these kind of are pushing upward. Like there's upward trends here. And then if you look at the moving average for the RSI, it's like constantly up, even though like this clearly has a lot of ups and downs. This is a 15-minute time frame. Same goes for the MACD. So like just because you're getting some kind of divergence does not mean like the next move is going to be like straight up or something. It just means that I think there's a stronger probability if you're going down and you're trending upward on a lot of these indicators. That's typically a good, I mean, I don't need to say I think because it's just a historic thing, but from a technical trading standpoint, that means there could be an inbound move. Now, this 62% retrace is a 62% retrace on this move. If we were to make a lower low past that 403 mark, then we're going to have to remeasure it. But for the most part, I think that's probably accurate, and mainly because it's right where it's supposed to be. And I went and looked at the last time we did this. I was just mentioning a few minutes ago, like this is pretty similar to this area back here near May 1st and going into May 1st. And the last time we did this, we also had a 62% retrace because it reads a little bit like a wedge. And normally when you get a wedge action, you do a 62% retrace. And in this case, they marked it off. And there's no other really way to say this because you kind of have like a perfect measure from here. So I don't know how you could say that an institution didn't mark it off, because it's basically a perfect 62% measure from there. And much like, again, I'm kind of recapping the video, but much like I think the video is better, so I'm just kind of rushing through it. But much like the this current example, this original height ends up being about the same, and it's offset by that 38% or whatever, so that you end up with a 62% retrace. So back up, and it's that little cliff. So when I look at the current time frame, that 62% matches this little cliff here. It gives you a really simple hooking action as well to come back up, and try to get back to this level again. And then the gap is up at like 490, 489. So it would not surprise me if we saw this like extend beyond to like 490 or something and then drop back below and kind of camp underneath 481. Now, I mentioned yesterday, and I don't necessarily know exactly how today is going to go. My thought was that we would bottom during pre-market and then probably run up early in the day today to 450. Well, the market's been open for 30 minutes, and all we've managed to do is kind of sell back down. We basically double topped here around 430, so that's not really good. So at this point, my thought is, basically, we just kind of wicked above it to 433, back to the level that we kind of closed near, or we were at right before close. So my thought is that, and I'm not sure I'm going to be able to draw it out perfectly, but my thought is that we're probably going back to check on a trend and maybe like a creek jump. So this lower one looks like it was already met, but again, that happened in extended hours. This higher one does not seem like it was met, and I don't know what to do with that wick right here, this weird candle high of 430. I don't feel like that would be respected, but yeah, we may need to come back down, like I said, to hit the in regular trading hours to kind of hit this low. So we'll see. So I think that I think the price action here doesn't look great. On the whole, it might look really bearish at first, but I think there's an underlying divergence that's building, and I think that maybe it doesn't work out today, but I'm venturing that by Monday, I think we're going to push back up sometime by Monday to the 481. This particular line right here is a trajectory, and I'm trying to remember why I drew it, but I think it was because of, I think I deleted it, but I think what I did is I did a top to bottom. So I went from here to here, so from the very tippy top down to here. Looks like I did it wrong. Yeah, maybe. Well, if I did do it wrong, it's steeper, not shallower. I mean, it is following the exit trajectory so far. It could be just slightly off. The angles on these trading view lines are just really like sensitive. If you change them like slightly, or if you zoom in and out, sometimes they just seem like they change. Because they're, you know, they're sensitive. And 1 degree on here actually covers quite a bit of space. So you can have like a 44 degree that's like slightly less steep than another 44 degree or something. And it just says they're both the same. I don't really know if there's a good way to fix that. It's just, it is what it is. So yeah, so this would be my expected trajectory out. So again, it's not really that I think that we have to end at 450 today. It would be better if we did, for our sake. I don't think you want to have a bunch of puts in the money, but I think a lot of this is probably, again, that shakeout, a lot of this is probably to get those positions cleared before they drive it back up, and that would be like a short trap. So, and look, right now it's not going to look like I'm right. So regardless, we're not going to know if I'm right or wrong till probably near the end of the day, and maybe not until Monday, because I don't really have a great expectation that this was going to happen. I was like hoping that we would see this push right back up. We didn't quite make it there. So being pinned under 433 here makes me think that we might get camped. This might be one of those things where we don't move till later in the day. We might be experiencing what we see in a lot of these bottoms is like a quadruple flush. So you remember like the March bottom? This just looks like it's selling back down through the gap. We'll talk about that March bottom a lot because it's a really good, it's a good one to look at for potential spring bottoms because it tends to be really common, I guess is the word. Let's go to the 30-minute. I think I can get there through the 30-minute. Now, and just looking at this from a helicopter perspective, you know, I think a lot of us, including myself, would just be tempted to say that it's just going to go ahead and go to that 373 mark. And that's where I have this kind of ending up later is at that 373. So if you're wondering like, well, you know, why not just complete the S-curve now? I don't know, you know, maybe we will. If we did do that, it would change a lot of the dynamic of this, obviously. I'd have to go back and be like, well, I was wrong, so we're going to have to fix that. But eventually, like I had this coming down to 373, I still think that's probably going to happen. So even if we were to go back up right now, I'm leaning towards a bounce and then slow drop to 373 by about that time that we reach FOMC. And another big part of that is the previous top over here. You can't see it. There's a wick up, but it wicks up to like 365 or something like that. There's a important kind of support level right there. And if you're looking at the big picture, obviously there's a, you know, that's kind of like near the previous top. We're not there yet. one thing at a time. Right now, I would be focused mostly, if I were just kind of looking at this, at both 415 as a possible support and then 40, 402, 403. I wouldn't look much past that at the current time. I wanted to go back and look at March really quick. Creek on lines. Yeah, I can review that. I don't really use the word maybe not as properly as I should, but it's more just observational on my part of what I've seen as acting as supports and resistances later. And sometimes they're trends, sometimes they're trajectories, sometimes I just call them creeks because I think they're acting more like a creek, where you're going to get like an ongoing reaction to them. I don't think so. When I think of trend line, I think of like almost always like channels or something that, again, is defining like the trend action, which is like up or down. So I think about it as like a constant support or resistance up or down in that way. When I think of creek, I think of more, it's not necessarily temporary, it's just scaling wise, it has to be kind of in perspective, but like, I think of a constant, it's more of like an EMA, where it's like a constant possible support or resistance, and it doesn't have to be respected as a trend would all the time. But they are often synonymous, so like oftentimes I'm talking about nearly the same thing, you know. Just to be fair, you know what I mean? It's not like black and white. And Wyckoff creeks are a little bit different. They're not like completely different, but they usually end up representing much the same thing as like a trend might. And nowadays, with the algorithmic components in the market, we end up with a lot of synchronization. And that's a good thing if you're a trader, because it's easier to predict where you're going to hit those later supports and resistances, right? So just quickly for an example, like back here, like this is a creek here. Yes, it's also a trend, and I think that you can make a channel out of it, and probably most traders are going to try to make like a channel out of it. But as a creek, it's semi-flexible. Like later, we're obviously going through it, but really, like the way you would define a creek is it's like a fluid line, so it's a lot like an EMA. And anytime you push up, so if I were to make an advance here that's higher than the creek, then the creek line supposedly comes up, right? And that creates problems if you advance too early, because a lot of times they're trying to jump the creek too early or jump a top too early, and then you end up crashing. So it has to be really bullish. Like it has to maintain that kind of momentum if it's going to advance a creek. So yeah, so it's a little bit more like an EMA. Like, and there's times where you would look at this and say, well, the EMA is the creek. Like here, this is pretty much exactly where the creek is, right? But then you can see that like this is where the EMA doesn't act much like a creek anymore, you know? And at this point, you've jumped it, and you're kind of pushing down through it. And this is where I would go back and use a trend. Then this is where I think the difference is like, at this point, like people are probably not going to be using trends to sort of define this action, but this is where I think the creek ended up. So it's like kind of the last major resistance points, and then where the first support is after you jump. So like these two marks right here, and then after you jump, you've got these two marks, and that kind of gives you an idea of where the creek is aiming for. That's kind of where I think there's a difference in like maybe in like the way that I do things versus the way traditionally Wyckoff would look at a creek. And Wyckoff creeks have only been around for like 50 years or something. It's like a newer thing. He didn't actually invent them. There's a guy later who talked about it. And it predated EMAs, like the concept that we have now with, exponential moving averages mathematically. Couldn't easily do that back in the day for computers. So he had a concept of them, I think, before. I forget the guy's name. And then I use opposing creeks to help define price action. So that's like rising and falling creeks. And like this is basically what it boils down to, like in the end, is that you end up with a, almost always, you end up with what I call like a cross, right? Where you've got like a rising creek that's like bullish action, and then you've got the jump, and this is sine waves. So this is where you get to like the stuff we talk about with waveform. And again, it may seem kind of complex. It's really not that complicated. Like when you're looking at a sine wave, it's just tops and bottoms. So you can see like how that is defined. And that ultimately, this move right here, which is also an SOS, ultimately that move right there is what defines the jump. So anytime we have a cat ear, you'll see me talk about that cross. You don't want to get stuck beneath here. Like this ends up being really important. And usually this area, and then usually this ends up also being really significant later on. It doesn't usually just go away. I don't know exactly why that is, but a lot of times that cat ear line ends up being either a price target later, or sometimes it's like this. It ends up being like this place you come back to and you end up breaking down. And then again, it's like, oh crap, we're going low. So anyways, I was coming here to look at March because that bottom has like a quadruple flush, and also I think has a divergence coming out of it on RSI. Yeah, maybe not. I don't know. I'd have to like zoom in to see. There's a cable over there. Right there by the other remotes, there's a cable that's tied up. Yep. You can plug it, unwrap it. Okay, I'll bring it over here and I'll help you. Yeah, this is divergent as well. I was right. So anyways, this is not that different after all. It's interesting too because the that long-winded buy-in and sell-off that we got from the May 1st area onward is a lot like this. It just happened really. I mean, it happened differently because it didn't come lower. But like we got that 1, 2, 3 move up, and then we came down, and then we got that May 1st area. And then the rest of it, because it's higher, it doesn't look quite the same because it's not a spring, it's like an LPS. So we did get the same like 1, 2, 3 kind of move, like in the beginning part. And then we came low, but we just didn't make a new low. We stayed like high. But it's interesting because it's still really... That you can plug right into the switch, or you can and play with it, or you can plug it into the charger over there by the plant. You can use a different controller. Yeah, so in May we actually came down, and this is why I was like really bullish going into or after earnings, well, into earnings and then afterwards. Was we actually did something really similar to this, and then we came down and we made like an LPS, and May is really similar to where we're May 1st is similar to the way we're approaching here. If you missed that part or you didn't watch the video yesterday, So we had a bottom after like in a divergence, just like we do here. And then we had that like kind of shallow S-curve divergence. And we had a bottom, and then May 1st onwards really slow, but it's like the same thing. Like basically what we did is we bounced up, and then we slowly like came back down, and then we took off. But conceptually, it's the same idea. So anywho, that was what I was going to say about that. Yeah. So like yesterday, we were looking at these crosses, and like it went up high, and it looked like it was going to break out. This is like almost exactly how it worked out not in our favor yesterday's. It went up high, and then ended up hooking here, and then like dropping. So you ended up having like an advancement, and then just like dropped. And you don't want that to happen. Once you break low below the rising creek, you either have a spring or an LPS, or otherwise it's going to go down. And unfortunately, in our case, it rose up like to this area. It did a little juke to the upside and then went down. So that was kind of that little spike there. Remember, that was like right before I stopped the stream, and then it kind of bled out. It was unfortunate because I knew like when it went up that if it didn't hold like that 429, that it would probably crash, and it did. It did crash. So, but the reason I wasn't like overly pessimistic is because of this setup. Like scale wise, it matters that this is only like maybe 3 to 4 days, depending on where you're looking at it. I mean, if you look at the biggest ones, divergences, they're probably back here to like last Thursday, so about a week. Obviously, these were about the same back here. Anyways, different time frames, whatever. So I wanted to look at this guy finally. Just went on a little tangent. I gotta, no pun intended. So I gotta talk more clearly maybe about creeks, because I think if Wyckoff people come in, they're like, well, what you're drawing is a creek until it isn't, and then it's not really the creek anymore. But even still, like, they exist. They don't go away per se. And you can always go back to like a previous one. It's just that you don't typically want to do that. So again, like the best way to describe a creek is like highs, and then once it's jumped, the next low, right? And then that keeps going. So I know I'm kind of dancing around this, but I want you guys to see the comparison, and if you're able to visually kind of look at it, then you'll see what I'm talking about here. Not exactly the same, is it? This kind of looks like a reversal. It could be more like this guy where you're just starting it. This one's a little more like what we see here. And frankly, after the gap, that's probably what you visually see, is you see this top and then drop down. But the idea that I'm getting at is that there's often like this quadruple flush, like 1, 2, 3, 4. I mean, there's a lot here. There's like 1, 2, 3, 4. Yeah, I mean, really there's a lot. I always say quadruple because I'm looking at 1, 2, and then 3, 4. But there's a lot of up and down here in the exact same pocket really quickly. So like with a creek, like this would be the one that jumped early. And it's a trend jump, but then because it found support higher, that means the creek is not way down here. And if we had done if I'm drawing like a line, a lot of times that's what you'll end up seeing me do, is I'll just drop a line and say, well, the creek's down here. I think that's like a lowest point, but ideally you want the creek to be raised, because you are also looking at things like horizontal supports and resistances, right? So like sometimes you don't want it to come all the way back through. It's a little dynamic in that way. But no matter what happens here, like they keep going up. So like then the next high is raised. And this is important because as it goes through the next one, it doesn't end up losing the next creek either. Again, you can almost draw that one like a trend. But even on like this micro level, you can see that each of these has like support and resistances that are kind of laid up on, which is part of the reason why that previous area that we looked at was kind of confusing, because we were getting what looked to me like an ascension that could represent something like this, right? And that was that channel up. The problem is that it didn't really read, like a lot of that didn't read that way, because it kept pushing up higher on high volume and then just selling off really low volume, and it didn't really look maybe exactly like what I wanted it to look like here. And we were spending a lot of time in the bottoms by the end. So anyways, there's a lot to it. These did technically lay up on those creeks and didn't break them, but ultimately like it failed to advance every time. So eventually you're kind of like, well, it's not this, right? Like you can't just hold on to that idea. And I didn't feel like, I felt like it was going to go down because it was not setting up the way that it usually does. There's other stuff going on here, you know, and I think a lot of folks like the simpler methods. I think it's not unwise. I think there's wisdom to that. And this is ultimately like a spring bottom. It channels upward, comes back to previous resistance and breaks. I would just argue that it's the channel and the creeks that really define this breakout and give you like that perfect kind of model entry. And the EMA crosses are also really important, but that also depends on what your EMAs are set at and like all that stuff. So, because this is a 90 hit right here. And I don't think people, like I've talked about how I use the 90 instead of the 100. And like, I don't know, like, so would this have been something that a lot of people would have looked at? I don't know. Maybe. I don't, it's hard for me to know, like, if that's the best way to trade it. And there's been plenty of times we've gotten above that and it's not taken off. So it's all about the big picture setup, and ultimately, like, I think this big creek defined a lot of it. This ends up being one that goes way back too. So you have like a channel break. Obviously, that's a big part of it as well. I don't think any of this stuff is like in a vacuum, you know. It's just the way that I choose to use it. That's all. I mean, there's other people that use channels and then just trade them like channels, and then that once the channel is gone, it's gone. But I see this as like, oh, this was a prevailing bottom. It's been broken. So my expectation is that this is the retest of that creek. I don't think it gets left behind. And I think these are institutional markers, the things that you see, not just gaps, although that can be part of it, but these little cliff points end up being where you're kind of laying up and then dropping. Yeah, obviously that's back to the original spot, but we could have done a creek test somewhere else, you know. The fact that this is a 61% retrace is pretty interesting to me. You know, I think that's mathematically improbable unless it was planned ahead of time. And then I've done some crazy stuff with this area. Like we've talked about the slingshot. There's some wild math that goes on in this region. Like one of the things that's crazy about this is when you take a measurement from top to bottom on this move, the 50% is like right here, right at the ledge. And at first you're kind of like, well, so what? That doesn't matter that much. But then you realize that like this is the case for all of the moves. Like they basically all have like a 50% marker on these original breakdowns. So you go back to these like original moves and you'll see that they give you like highly adequate targets for like the tops. And there's things like that again, they may not seem apparently that interesting. When I first did this stuff, I was using curves, and curves are not, this is like way back, curves are not that reliable because you can draw curves and you can mess with them way too much. I don't feel like they're very reliable, but I think there's a principle, and the reason I called it a slingshot, because I think there's a simple principle of like, let's call it return energy, where you have like a bow, like you're pulling the string back and then you let go. And what I noted was that there was a, let's just say there's like a proclivity to like pull back the bow, if you will, on these moves and move away from maybe a trajectory X amount. And I did a lot of videos on this way back in the day, but like basically it was this concept of like you take like a 50% stride across these main trajectories and then you end up with these really interesting trends and like trajectories that end up getting you back to where you kind of were before. And it's a it's usually a 50-50 kind of thing. Like they set up markers at like 50% markers, and then once it's released, you kind of just go and you catch back up. And it has to do with a lot of things, mostly sine waves, but like those 50% markers are here like all the time. So like even in the current region where you might see this as kind of just a measured move back up to a support, like even still, I would venture to guess that we probably could see this as a measured move of like 50-50, as it were. So like your 50% marker is way back here, but it ends up being like this. I mean, in this case, it's so easy because it goes from all the way to the bottom to the top. So you're kind of like, well, duh, of course it's like going to be like in the center of like these particular motions or whatever. I actually think this goes higher because I've got it only done up to here. It goes to the 1330. Anywho. That's not ultimately how I measured this move, though I was trying to measure it like as if it were like a march style move. And that's why originally my targets were like 14. That was the big one. And then right below that, just the 11, just because of the previous support there. That wasn't really hard. Probably a lot of people were looking at that. The 14 one seemed kind of obscure to a lot of folks. But I knew that like they had marked it off, so like it didn't seem like maybe the like a common sense target, but they had already marked it off back here. Like they had marked off that 1350 area when we came in, and so to me like 14 wasn't even remotely a stretch because I was like, well, that whole range has already been marked on the way down. Like we hooked there, and historically, it's also provided resistance and supports at times, like going backwards, way back. So anywho, you guys are like, okay. But there's like a lot of other stuff we could talk about with like waveforms and all that jazz. Yeah, like this one is stopped at like exactly 50% in regular trading hours. That's kind of crazy. And then it gapped up like the additional amount. I think that's pretty interesting. I guess I always assume that waves are going to be like 50% crosses, but I guess they don't have to be. You have to have the original trajectory to kind of get it right. I think this is what a lot of that pitchfork stuff, and really the fib fan stuff as well, kind of plays into. Like there's a pitch fan you can use with fibs. It's kind of the same way. It's like taking a measured move. I think the pitch fan might be a good one just to throw on there and just see. Where is it? Yeah. So you would take like the bottom to the top of this move. Mine's kind of crazy looking, I know. And then it would give you supposed, excuse me, potential like trend lines. It's probably not the best way to do it. Usually you do it like the other way, like down. but you could do it up, I guess. Or maybe better would have been this. And this gives you a really clean, well, frankly, it kind of gives you the top, doesn't it? It's kind of interesting. But the center mark on that pitch fan ends up being right where we are. So it ends up being kind of a 50% percentage-wise, right? Kind of a 50% marker for like coming down. These aren't designed to give you, again, like exact places where you're definitely gonna stop or whatever. But in this case, it was pretty darn close, wasn't it? It was almost exactly where that pitch fan ends up giving you almost exactly a perfect trajectory. Notice, notice where that middle 50% is going though, is it's the cat line. So like I don't even use that, but I use this all the time. You see me using this one all the time where I like go to the cat ear. Like that's really commonly like the 50% marker, like almost always it works. So like that's why I use it. And why wouldn't it work? Because they set it up that way. Like institutional traders with their algorithms and junk set it up that this was a measured move, you know, and that this ends up being, whether or not, maybe it wasn't, maybe it's forward thinking. Maybe it's not that, maybe it's retroactive thinking. Maybe they're not necessarily planning on being a certain way, but mathematically, remember this is like a 618 retrace. So this is like a one wave right here. This only comes up 618 on the next one. So they've created like a, they've created like a trajectory like through the middle of those two. I can't draw it, this thing. Right? And that's giving you like a waveform trajectory, like we would call it a tangent. So, I don't know. So it doesn't really confuse me that works really well with the pitch fan. Like I feel like that's pretty normal. I just choose to use like a visual representation of what it is, which is like the wave, instead of measuring it out. But the measuring obviously confirms that as a reality. So from where we are now, that could indicate quite a huge, significant drop. You could be looking at that 190 level, depending on how you measure it, 160. If you're measured to the outside, it's like $2 or something. And that's just a way of understanding like a possible massive S-curve. If you think that that's the way it's going to go, then you'd be looking at like $2. But I also think we've got, big picture wise here, we've got a lot going for us this time. So I'm hoping we don't get that full S-curve. Yeah. I think we're going to stay, I don't know, I think we're going to stay above this yellow line. So, and I don't think we're going to, I made a case for it in the video. I don't think we're going to make a big move just yet. I think what makes the most sense to me is to have like a chop, another chop period. Like I get what this looks like, but I also want to draw your attention to things like RSI and whatever. And the mirroring here is pretty obvious, and we've got potentially another couple bounces, at least one more big bounce in this mirroring. And we're already oversold on pretty decent time frames. I mean, you go up to like 1 hour, and we're still like in the pocket there. So could it go lower? I guess. Yeah. I'm just kind of looking at the way it's building out, and then I would look at something like this on the RSI and be like, well, yeah, but where's the where's the test? It's typically there's a check that happens after a breakdown, so it's kind of missing it. right here. It's like anything. You'd expect there to be like a cross, and so you'd expect there to be some kind of an M shape, perhaps. It doesn't always happen, but most of the time it does. So, like even here in this breakdown, you know, this guy had to push back up to that creek, and it was evident. And this was a really, I mean, this was frankly like a really weak range on the whole, but even this has that reactive move back up to retest that trend support. So it'd be really strange for us to just like not do it. And usually our operators tend to be more bearish, and they tend to do a really good job going back and checking creeks. Not all the time. Lately, during these downward motions, there's been a lot of things left open. At this point, a lot of them are filled. Like we filled a lot of these gaps pretty high, you know. We left the one at 13 because that was only in extended hours, but yeah. So like on the big picture, like what I've got drawn out here, basically what I've got is this guy here. It kind of looks different, doesn't it? Without extended hours on. It doesn't look like we've hit it yet, but I guess that makes sense because we did hit it in extended hours. So there you go. This one was not met in extended hours. It was during regular trading hours. So that's what I was wondering. We may need to come back during regular trading hours and touch it before we can continue onward. Yeah, it looks pretty low. It's weird. It's very different. Extended trading makes it look like you've already hit that marker a couple times. This definitely makes it seem like we have not. I found this one to be quite curious though, because it matched the breakdown trends, and it matched the trend we were just on really well. So it made me wonder if this is sort of like a channel that we've re-entered on the big picture. I think it is, but that's why I also think it might be sensible, though it may not happen, to see it kind of react here, back up, go ahead and get that hook, and then come back down. And at that point, I do think we're probably going to go back down low. Well, today's price right now is $4.15. GME is sitting at $22. It had its gap fill early this morning at $23.80 area, and then it seems like after that point it's been kind of just coming back down. Really wouldn't have expected it to stay high the whole time, but much like what I talked about before, like I felt like it probably wouldn't come back above 24.30 maybe. That was kind of the peak point here. So this may end up being relative high. We'll see. There's a lower trend support. I think it got broken here. Yeah, it looks like it just slightly broke that lower trend support. So it'd have to find maybe support on the moving average. This is a 10 minute, so I don't know what that means. Probably not a lot. Maybe support down here at 21.21 or slightly higher. I guess there is kind of a creek support right here. Yeah, this would be one right here, roughly. So we'll see. I think there's a possibility it catches and still makes some advancements today, but it already is out of that trend. So for now, like that's gone. Right channel. So I don't know. I mean, let's take a look closer at AMC. Maybe it's not going to be very bullish here. I still think the big picture looks like it's ready for a move back up, but maybe we will get kind of stuck in the mud on a Friday. One of the issues yesterday was volume. There was no effort on Bull's parts to really like advance. So that rising triangle came to nothing and broke down. And during the day, I was really bullish about it till like the very, very end, because it wasn't capitulating. Like I hadn't broken down. As soon as it did, I was like, well, we'll see. Because it's still, to me, again, big picture wise, still looks pretty good. But I feel like there was room to go down quite a bit. And we did come down to 403, which is the 786 hit. And that's fine. I was kind of wondering if we needed to do that during regular trading hours here. So at this point, we've seen kind of a double resistance. So there's a resistance here. You can see that's kind of where I drew these lines out. So basically at 413 and 418. See that you got two wicks here on the 15-minute time frame. So there's some trouble getting back above maybe 420, and there's some trouble getting back above 430. So we're just kind of like walking down. Volume is diminishing as we're going down. So that could be a positive sign of maybe a turn coming. I haven't checked lower time frames. Yeah, not much to say about this. RSI is staying pretty tight in the 6 minute. 6 minutes usually a pretty good one for trading if you see it make the hits, but it's not very reliable during like a downtrend or a steep uptrend. So during the sideways portions on AMC, the 6 minute is like golden. It's super high probability turns. I told you guys how I found that, right? It was because I was doing that RSI simulator thing. I was doing a trading, no, it's not a trade simulator, it's a trade, you kind of can build your own indicator with a trading strategy. And I used the RSI trading strategy, and I found that on the 6 minute, if you look at between 3 minutes and like 15 minutes, the 6 minute, I checked like all of them basically. And the 6 minute with very particular settings, specifically like basically like 3 below and 3 above. So it's 33 and 67. So like tightening it a little bit. So what it means is that if it passes above it, it doesn't trigger. If it passes above it and then it comes back below and there's a certain percentage move, then it triggers. And what it did was it created like a 71% chance success rate, which is really high. It was the best one I could find for a range on AMC. Yeah, I don't know about that. I don't know about that, the bot that you have. I don't really fully understand it, but you've given us really good information, so I saw it earlier. Waiting for divergence on 5 minute. Yeah, right now there's not really much positive to talk about just yet. This trend looks wonky. I don't know why. I wish I wish it didn't do that, but without a GME move above 27, are we going back to 2? I don't know. Like, ultimately, do you think we go back to 2? Maybe. I think if you have, I don't think it's going to happen. Like I've already said this. I don't really think it's going to happen right now. it's possible that the move happens going into FOMC, I guess, if the setup is designed to be that way. The timing of it definitely has the head and shoulder finishing on the 11th, which is the day before FOMC. But it's more of an unwinding, and I think that it's debatable how that sets up. I've kind of already given my 2 cents about it in the video yesterday. I don't want to kind of recap it again here today. But I don't think it's going to go all the way down to 2. I really don't. I'm just going to have to stick with what I stick to, you know? And if I'm wrong, I'm wrong. But I'm very open to like the idea of bearish action here. I'm not thinking that it has to be bullish necessarily, but I think that there's a stronger chance. So if I'm talking about probability, I'm on the bull side right now, and I'm not talking about macro bullish. I'm talking about short term. Going into next week, I think we're going to be back up at like 480. And then I think after that point in time, I'm kind of like low-key bearish. I think you're going to have it chopped down. I don't think we're going to get some massive straight drop sell-off. I know that that's what we expect on AMC. So it's in the back of my head that like, well, anytime this kind of stuff happens and we end up with this big S-curve and we don't sell or we don't turn or whatever, if we get that second ear, we end up just dropping like a rock. I know that, but I have a stronger sense of understanding with the chart right now if it weren't to do that. And I guess if it does do it, I'll just have to go back to the drawing board, you know. But I've got a feeling we're going to push up to 480 and then we're going to widen out and start a big widening spread that dunks us downward into the threes. And then I don't know about FOMC just yet. I think this is where you got me kind of, I don't know, you know, maybe. This is just my idea. It's not like it has to happen. And there's reasons that I have the idea that I have, but I could be 100% right about the whole structure, but still be a little bit wrong about what markers are hit. This is not the exact same as the earlier, we call it shoulders. They're just not the same. It's happening way higher. There's a downward angle to them, whereas there was an upward angle to these. So it's setting up higher with a downward angle, and these were set up lower with an upward angle. So it makes me think that like it's going to keep following the downward angle on the reactive move, and it's probably not going to, like, see, if we were going in reverse, perfect reversals, right, you would expect this move to then come up and make a higher high, so this move should be coming up above to like 550, right? Well, in theory, yeah, if it were flat, but it's not setting up the same way because this already came down and made a new low, and locally it was a head and shoulder breakdown. It kind of already hit that target at 430, and we're going to that 786, so it's like, I don't know, man. It's still set up on these downward parallels. They seem really relevant to me still. These are the ones we picked out from the comparison that we made to January. I don't see them as going away. I think that they're still in play. So I think there's sort of maybe annoying to look at it that way, but I think there's kind of a two trend competition going on. One is this uptrend, these uptrend parallels, the other is these downtrend parallels, and I think you're going to see it build out on that. And the question is really, how does it build out on that? So that's where subjectivity comes in, and subjectivity is in the marketplace no matter what you do. There's nothing you can do to make it completely objective except for maybe using math, like retracements and stuff. But even that is like, I'm making a choice to trust that this retracement could possibly happen. So yeah, so I'm inclined to think that we set up basically on this previous top area going into FOMC. So I think this is where we're going to be in like a week and a half or whatever. right around like the 360s, 370s. And that's the lower trend. It's basically this area. I don't want to be too precise about it. So it's that lowest trend line that we have. I think that's where we're going to be at FOMC. And I think if at that point, I think if we have a breakdown, this becomes like a model for like the double cat ear, just like this was. Cat ear 1, cat ear 2, you're going to have cat ear 1, cat ear 2. I think that then at that point you have a potential for a breakdown. I think here's where, like if the market doesn't react well, here's where I think you could have it kind of just slide and you finally go back down to those creeks. I still don't think it's necessarily going to be lower than the previous low. I mean, I think it's possible we could catch it like 250. I know that that's not what everybody's thinking, but and maybe at worst we get kind of a double bottom, or maybe another possibility. I wouldn't say it's worse, but maybe another possibility we get a double bottom. So the $2 comes from this idea that like, well, if you're already like going, then you're probably going to just keep going. Like, so if the S curve just keeps going from here and it's finishing, you're going to head down to 290 or 190 or $2 or 190, like Nick was saying, by the next earning or by FOMC. And I think it's a possibility because there's a, sure, there's like a decent chance that we already made like a cross here, and this is the S curve, and it's going to continue down. But if this moves up to 481, suddenly that concept becomes highly invalidated because while, like, yes, this does look like a really clean S curve, if you extend it outward, suddenly the S curve can be very quickly widened. You can see it on my chart, just the way I drew it. Like, and there's still a thing as a shallow S curve, and I can't argue that this is what this is anymore, but I don't think it is, but it's still there, I guess, in some ways. So sure, like I could look at this and say, well, I think that it's got to go down to 190 because that's where the S curve is measured. But that's just like one way to look at this, you know, like this actually said 160. This is like one way to look at this. The other way to look at it would be, well, we thought the same thing earlier, that if this was an S curve, that you could see it go down here, right? Because this looked like an S curve that was forming. You know what I mean? Like we kept drawing it out. You can continue to stretch it out. So I feel like there's still a subjective assumption that it's going to complete within a certain amount of time anytime you draw an S curve. And it is TA, but it's like you're giving precedence to some factor, time factor here, by saying this is it, it's going down. Now the S curve is going to really speed up. But if this goes up to 481, suddenly it's like, oh, well, you know, now it doesn't look like the same S curve anymore. You know? Now it looks like a much wider S curve. So there's really nothing to say that we have to go to 190. I mean, I get where it's coming from. I get the targets. I do. But I think conceptually, like if this is just a massive unwinding and it's going to unwind in a kind of a symmetrical way going into FOMC, I don't expect us to be past 373. I think it's going to be really boring like 10 days coming up. It's going to feel like painful and boring and silly, like we're just kind of waiting. But this to me does not look wrong. Like this looks like an entirely strong possibility. And that's how you get that retestment on the creeks. So you see the difference there? Like, in one case, yeah, like if we were to accelerate now, I think it's an easy enough argument that you're just going to go down to like $2 or something, like immediately. But there's no rule that distribution has to lead you to some number. Like, that's not a thing. You know, like PNF is probably the best way to get measurements. So if you did like a PNF measurement on this as a distribution, like where would it maybe get you to? I'm not thinking it gets you very far. Like, I think it's probably this number. I didn't do PNF on this 363 number, but I'd be willing to bet that if you did just a PNF on this little range right here, that it would probably only get you to like 363. The targets for the PNF are they're pretty subdued, like they're pretty realistic. So there's a pretty dramatic difference between these two, right? And like, that's what I'm trying to say is like, there's not I don't see it as a one size fits all kind of thing. And even here, if we were to get that drop, maybe that happens and then, you react up. But if it's a higher low, then that's a really different situation than dropping to a new low. So double bottom would be fine. In order to get the gap fill, we only have to go to 295. So I think it's just debatable. So just be careful when you draw S-curves. Like, they're going to be really, really different depending on the timing that you draw them. And where you choose to pick your 50% marker. I think that's also really important. I'm inclined to think the 50% marker is actually a little high here. I think it's this maybe this 505 level that we kept selling off from. I think that would probably be a more reasonable 50% marker, and it does lead you down to like $2. So it goes pretty far. But if I were going to pick one, that's probably what I would pick. I don't think I'd pick a lower one that goes to like 160 later, because it just doesn't make sense. I think that 505 area ended up being like the sticky point. So yeah, but I mean, look at 30-minute time frame. Look at where we are, currently, RSI, MACD, all those things. I mean, is it possible this just turns down and keeps beating it down right now? Sure. I just think it's not as likely as like either sideways or just slightly up and sideways. The weekly 20 moving average is 395 as well. January 21 tested that before. You tested the weekly 20. Yeah. Well, we'll see. Right now we're just sitting at 413 doing nothing. So if the goal is just to pin it at 4 today, then that's the goal. I mean, I can't control the market, so you just take what you get. But I think that I still think that I'm just going to stick with what I think is right and what I think is more probable. And if I'm wrong, then I'm wrong. If the odds aren't in my favor, then the odds aren't in my favor. But I still think we're going to see it move back up today. And then going into Monday, I think we're going to be up at that 481. MTW is looking good today. I don't like the gap up, but I'm happy to see the positive percentage. It looks like it found support at 5, so I'll have to watch volume on that one and see if it takes off. CubeSmart may actually break out here And this is one I've been watching for a little while. I'm not convinced it's not going to keep going down. Still hasn't become oversold on the daily, but I don't know if it's going to ever make a really huge drop. Like in previous times, it's gone really low. And I get the feeling it's going to end up staying here pretty elevated. You guys are like, I don't even know what you're talking about. What is that? That was another one I picked out. It's another REIT. NU's down quite a bit today. Dropped 2%. It was up near 1230. Now it's down to like 1180. To be honest, it's not looking super hot for this. To me, this looks a lot like, I mean, you might look at it and say, oh, it's a cup. Maybe, you know, it could become a cup and handle type thing, but I feel like it's already gone too low for that. And then it's, frankly, it looks a lot like a cat ear to me. So I think there's a possibility this just starts breaking down. And if it does, it does. I've already got to stop at my 1150, so if it just starts crashing, I'm out, and then I'll re-enter later. I looked at FFIE earlier. I also looked at BNED, and that was one I kind of said I didn't really want to look at, but yesterday. But I think that mainly it's because I still don't like the idea of chasing anything. I think it's not wise on the whole to try to chase a move. This to me still has a lot of indifference to it, you know. And we talked about FFIE, which is, I mean, I traded it yesterday. I made 10% on it real quick, and that was it. It's not a bad thing to do if you want to do it. It's oversold on the hourly. And that historically hasn't meant too much. At different times, it's kind of been oversold and not really reacted very much. This is obviously different with volume, so maybe it's more sensitive. I was watching that gap up this morning on FFIE, and thought that was kind of curious because it went up above the level that I wanted it to, but I was like, it doesn't really look like it's in a good spot because it looks more like a distribution effort right now, because it pushed up and there was like almost no way that it was going to hold that support with the giant gap below it, unless it just had a lot of volume right here at 64, and it did not. It just sold through. So yeah, at this point, I'm not super bullish on this until, again, we see it come back above with support. I think it already hit the marker, kind of hit that target. So we talked about that cross earlier. That's these green lines. Get rid of this one if you want. And yeah, and then there's the channel. We talked about that yesterday. So it should be 21. There we go. So like this intersection, is this fairly predictive of where the price was going to be, right? Yeah, I mean it was. So this is like that slingshot where you dropped out of the trend and then you return later. So it made the right advancements to do that return, but now it's kind of like, well, now what, you know? You could look at it like a range and say, well, it just has to find support here at 55. I think if it drops this like 55 level, it's probably not going to go well for it. I think we're probably going to see it come down and probably going to make a new low. And we're going to have like a deeper retracement on this move. And then we'll see. If it can hold 55, there's a chance here that it still could advance. It just has to jump back over the creek. And at this point, because it pushed up pretty high, I would just go ahead and raise it to like here. So essentially like this would have to happen. Again, maybe this doesn't happen today. Could be like a Monday thing. Hard to say. IWM pushed up pretty far. Got to 206. I almost traded it yesterday. I thought about it. I thought about trading from here up. I didn't. I kind of wish I did because I was pretty sure it was going to move up farther. I think max pain for IWM was 207. So I think there might still be like this. I know I keep throwing it out there, but there's there could be like a midday turnaround here that sort of propels all the stocks back up again. It's not looking very good. It looks kind of weak to me. I don't know if there was bad news this morning or something. I heard about the indictment or whatever with Trump or whatever it was. Not the indictment or the charge. I guess it's the verdict at this point. Whatever. Uncertainty in the market can always cause volatility. It doesn't matter what your political leanings are. It really doesn't. If one of the top candidates in a political party, if their candidacy is in question, that would cause a lot of potential volatility. But I don't think that in and of itself necessarily is the only thing causing the price action today. So, yeah. So basically, I'm not sure. If it's but both of them are like, what I'm trying to say is both of them are basically the same. Like max pain for AMC was higher. Max pain for the IWM is higher. It could have changed, but I believe it was still at 207. I don't think FFIE is dead. I just think that it has to make it's probably going to have to either make it, if it doesn't hold this bottom here at 55, I think it's just going to have to make a new bottom. And I think it might come lower. We talked about this yesterday, like that you could see a kind of a copy paste of this smaller region, but on a larger scale, in which case it would probably come down to like 45 cents or something. But earnings is here, so I mean, it could change rapidly. I mean, this thing could have a positive earnings report and just be like gapping up to 120. It could have a negative report and gap up to 120, and it could have, it doesn't, I mean, this thing about earnings is they're always so like unpredictable, you might have this idea that they're going to be a certain way. And it may not matter that much, The volatility is just the volatility. Yeah, so on RSI, one thing I like to look at is similarly, I would look at this trend here and I would see if this is like coming up to meet it. So is this like a hooking action for that trend? I'd say it probably is. So possible, again, need to kind of come back down. This is only the 6-minute time frame though. So it's not maybe not the best indication of price action. You go up higher, you don't really see much of anything. You might say like there's still a need or desire to push back up high. I would say this is probably gone now, but perhaps just being as low as it is, you might start seeing it turn back up some towards like the 50 on the 1 hour. Hard to say. Yeah, this just looks like a walk down on 4 hour. Like it's trying to get the RSI reset. So the good news about that is that if it does reset higher, you might be in a really good spot because you'd have a really strong move in play. I don't think that I don't think on the big picture, I would really play much of this beyond just like daily stuff until it jumps over the prevailing downtrend. Because at that point, there's a strong chance it's going to come up here. And that's a big move. So even if it didn't happen now, even if you went lower or you just went sideways for a little bit, that's still a really big move at play potentially. That's why I'm keeping this on the radar. I think it's an easy enough setup. So I don't want to make you feel bad if you're in it and you've got a higher average. It is what it is, It might just take a bit to find a bottom. And there is some space to move down still on the higher time frames. Yeah. Yeah, maybe sideways. I don't remember if we did a Fibonacci on this. I'm kind of curious where the 50% one is. I don't think we're there yet. Oh, I'll take it back. I think we are there. I think we're right there. So, I don't know. We may stay above 39 cents. If I were an operator here and I wanted to take it up from the 50, I'd probably, there's a lot of volume off this bottom, but I'd probably dip one more time and just make like a slightly higher low or something and then advance. It looks like the moving average is like slightly below. So that also might be at play here. That would be like the 2-hour 180 or the 4-hour 90. That's at 51 cents. It's really close to this support level that we drew out earlier at 50 cents. So we might just see it dip to like 50 cents. That might be as low as it needs to go. I wonder if there's another creek there. AMC sitting pretty at 415. There's not much else to say about it at this time. It pushed up early this morning like a lot of stocks did, and then it's dropped. This is a market-wide move. I mean, they're all pretty much the same here, so it's not just AMC. The whole market kind of did the same move today. There was an up thrust of some kind last night, and then everything's kind of coming down this morning. Yeah. So almost everything started green today, and then it's all sliding towards red or zero or past it. Yeah, that intersects the same point, doesn't it? So that's a pretty important point of contention right at 55 there. That cross was fairly significant. Yeah, I'm inclined to think that this is sort of the target area. There's like 3 intersecting creek levels there, or maybe we call them sine waves. So it's like macro and micro sine waves are all kind of aiming towards a similar region. And then when you look at the big picture, it's kind of like, oh, well, it's between these two fibs, here to here. It's fibs within fibs, right? It's a 786 region if it goes all the way down. And if it catches higher, maybe 618, and then the 50 is a 0.5. So it's definitely, in my opinion, it's definitely a set up to go back to the 50, I think. 50 or 45. Both of them are logical. So 50 cents. If it stopped here, it would be just like a higher retracement at above 54. These are all like really even numbers, aren't they? It's like 45, 50, 55. That's super simple. Easy to remember, right? Well, that's nice. So any of those, I think, could act as support, potentially. So it might not be a bad idea. I'm going to get rid of this green cross for now because I want to clean this up just a bit. It might not be a bad idea to look at this trend instead. And it already looks like it kind of hooked up through it, doesn't it? So it already broke down there. It's flattening out. That could be like a wedge. It could be, but it also could be a setup for a breakdown. $0.63. Right. So if this breaks to the upside, you might see 63 cents again up here. It's this marker we already had. So it's set up as a 618 for this move. To me, like at this time, that's still like a hook unless you get this kind of price action afterwards. It just depends. So if we get that, that's where it probably would go. I think if it doesn't do that, I don't know, I still think 45 might be at play. It's hard to say we get down there. Yeah, it's hard to say. It's one or the other, so I don't really see much else here. You can kind of see it's pretty straightforward. If it loses support, it's definitely going to drop to 50, I think. That's a given to me. And then if it loses that support, it's going to go to 45. So fairly straightforward. Yeah. Yeah, that's divergent RSI right there on the 30-minute time frame for IWM. So that pump might just be that pump. We may not get to that. We could get one more maybe today just to close higher, but then I don't know about Monday. It's not looking super healthy. It already kind of lost the 30-minute. It looks like it's distributing back above the moving averages again. Like it doesn't want to find support. I will say this, it broke above the downtrend for sure. There's no question about that, no matter how you draw it. So it did push resistance first. So this divergence might seem really bad, but if it changes direction right now, there could be no divergence at all. Because you could see this as a top, and then this is a extended hours divergence. So like it might apparently seem like this is going to just drop, and it did. It had a negative reaction. But if this were to continue upward, you could easily make a new high at 207 and not have that divergence. So the danger of maybe leaning too heavily on RSI and junk is that this could just be part of another upward move. This could be like a chop. And it could be that it's not, and in which case we'll just dump and there's that. But, you know, it's hard to say at this point. This could end up being like a kind of an M-cross type deal where this really ends up being like the jump later. You see what I'm saying? It's not, none of that's guaranteed. It's just, I'm trying to caution myself against putting too much emphasis on like this kind of a move as a, oh, it's got to go down kind of thing. Maybe it doesn't, you know? It's different when you've got divergences that span multiple days and they clearly have regular trading hour bottoms versus something that's possibly just very temporary. This could take all day. I don't know. Right now, RSI, MACD trending down on IWM. Right now, you know, it's gone red. I'd say it's probably at or below support, sitting like right on it, maybe at 203.98. 203.92 is where I've got my support. So it's like right there. I think if it turns up, I don't think this divergence right that we're seeing, this downward pressure, is going to stay. You can see there's still like a prevailing uptrend that hasn't been lost. So it's important to note like the larger trend here is still up on RSI. So like even though there's like a mild divergence for sure, same with MACD, is that these larger trends are still intact. So I would just kind of be careful here. I don't know if anyone wanted to trade it, but it wouldn't take very much to turn this back up is what I'm trying to say. Like a buy-in here, maybe a local breakout, and it's probably going to reverse and just head back up. Let's take a look. Yeah, on the 6 minute, crossed bearish around 204.82. That makes sense. It's like basically like the previous top. There's a lot of buying in here in this trading sideways. The steepest of these trends is kind of already gone, so I'm not really sure now what to say. Let's go to really tight here. Let's go like 1 minute. Maybe if it wasn't checked, we need like another decent drop and then we can turn. But it looks like that channel is already out. Let's see if that's the parallel. Yeah, it probably is. So I think at this point, the like smallest channel has been dropped. The parallel's been jumped. So it's probably best just to look at this bottom through here as the creek that we're going to have to deal with. So remember bottoms and tops, and after you jump the creek. So this is where that bottom was previously here, and then you can see it did try to hold it again, but it failed, and that created like a trend. And then now notice that this is where we're bonking our heads presently. So that to me is like a really critical creek for bulls if you want to see bullish action. So on IWM, if you were to jump this particular creek here, which as the crow flies is like 204.29, I think that you're going to see it push up again. Because at that point, you're now outside of the downtrend and you're back above that kind of whipsaw. And it changes from there to then looking at maybe more vertical creeks. Because at that point, you could just do a retracement of this move. That's one way to do it. So you could take the full length of this move and say, well, where does it retrace? Maybe 205, 205.30. That's this previous ledge over here. So that's a possibility. Again, if it jumps here. Easy way to trade because you can make that trade pretty swiftly and get that reaction as long as it goes. And then probably, it's a guess here, but I'm going to guess that this bottom through the middle is probably the same. This is the bottom of a wave right here. So you're looking at a potentially like a new wave. It's really high, isn't it? Actually, it looks like it's this trend, isn't it? So that could even be a potential target too, because on a really bullish move, yeah, bottom to top, you can see that's the 50%. So this wave has a cross section, which means that it's pointing up. Like the momentum's fast. It's really steep here. And this retracement, if it has kind of that slingshot effect, should come back up to meet that in an ideal world. That gives you like a pretty substantial move back to 207 near the end of the day or middle of the day. So at first glance, the first thing I saw was that divergence in the RSI, but I think that even if it dropped a little bit here, it could drop lower, come down a little further. Once it jumps this creek, again, it could happen now, it could happen way later. I think there's a pretty strong chance that you could see a strong reaction. The earlier the better, because that would, to me anyways, it would seem a lot stronger. We may not get 207, but we may get 206.50 today. That seems a little out there, I know. Because you guys are like, well, that's like way away. I know. Maybe it's reaching a bit. It's just the way it's set up. So confirmation for me would be a move above here, like 204.38. I think we'd be a good confirmation target. And I think if we got that push and then found support above 202.22, I think you're going to move pretty swiftly back to the upside. The length of this channel is pretty wide, so, but almost all of these are after hours, so I'm not sure. Is there even like a bottom here in regular trading hours? No, not really. This would be like a steeper trend. I'm going to turn off extended hours for just a second because I think that it's going to look really different, yeah, in regular trading hours. None of those bottoms are in regular trading hours. So in regular trading hours, the bottom's like right below, like 203.72. That could coincide with AMC going for like a 403 touch. And get a big turn. Interesting. Yeah, it's fascinating. I always think it's really cool how like the EMAs tend to like kind of pinch together at these really critical creek levels. And the price action generates targets. It's almost like we're all targeting like the same thing. We're all targeting these pivot points. I guess if I were to give like my outlook, if this turns, maybe we come down a little lower to like 203.68 and we get a push out and then we find support. I think it would probably be like a move something like this. Yeah, maybe an hour before close, get up to like 650 and then just camp. Now if it breaks down, obviously completely different situation, but I guess we'll find out. Where does it go if it breaks down? Yeah, I'm not sure. Maybe that gap, 202.55, something like that. So then it's really low. So that changes everything. Yeah, that would change a lot. So coming back down to that 202.50 area would be really different for the market on the whole. Much more bearish move, at least short term. Hey, too close. I'm reading back through. We need to close above 387, bullish engulfing on the monthly candle. Weekly 20. GME calls are insanely expensive and no options chain for September yet. Very weird stuff there. Weird because AMC has had September options for a month and it's quad witching. Looks the same market hours, price action for 3 days straight. Algo's putting in the work. Yeah, this kind of stuff on IWM looks really repetitive, doesn't it? You can see the same kind of chop and pop kind of stuff. And sometimes that's what it is, you know? It's a, you just kind of rinse, repeat. There's something that's being achieved in this move. We don't always know exactly what it is. We could guess whether it's accumulation or distribution or swapping positions. And then you just see it kind of recycle the same thing. I think a lot of the stuff presently has been more about maybe the uncertainty in the market, and then going into this FOMC meeting, there's a lot of hawkish comments, so regarding interest rates. So I think that's causing a downward action in the small caps because they don't think that rate hikes or rate cuts are on the horizon. So like previously they had said that they were going to start doing that a long time ago, right? They said they were probably going to start doing it this year, and they were not expecting real estate to change that quickly, but the higher inflation has been, it's kind of like here to stay kind of stuff. Like it hasn't really changed that much. Now they don't see the need to raise interest rates either. You know, that's not the problem. They just don't see it curbing very much. And I think we may not get any kind of surprises, but you never know. You know, if inflation data comes in and it's cooled off a lot, that could send small caps through the roof, because that could indicate that maybe we can start rate cuts earlier. So there's a lot to it. And the weirder thing is, like, when you look at unemployment numbers and junk. It hasn't been as dire, maybe is the right word, as one would expect. So, like consumer, like they do the, excuse me, sorry, I got some of my eyeball. Like how much people are, basically it's like how much people are spending. Are they still buying stuff? Are they still spending money? Things like that. And sometimes those data points have been way off in the past and caused our FOMCs to go crazy, but it's been fairly steadily like getting better. So, I mean, over the last year and a half, there's obviously been some misses. No one's going to say that it's all been good. I think when 2 years ago, people were talking about stagflation. I think they were probably right. And then the market just took off. I don't know. Just left small caps in the dust. Well, I'm no roaring kitty. I'm not like that guy, but and I can't really speak for that crowd. Roaring Kitty is gone again now. Is that what you're saying? Like he's disappeared again? I think he's coming back out of genuine care for the community that he's in, but I don't think that he may have some invested interest in it still. Like, don't get me wrong. I don't think he probably sold everything, but he would be pretty silly to have not sold like a decent amount of his position because the guy made millions of dollars and he's, for a family, like that's a big deal. So I don't know why he wouldn't have. I'm sure he's talked about this. I don't know. I don't really follow the guy. So whatever. Placing ads now to join his education platform. Sure. So it looks like this is going to break. I don't know. It doesn't seem like it's holding very strong. I think we were right about this creek, but it came back down to check it, and then it sort of popped and then dropped again. So if buyers don't step in right here, I think we're going to see another drop back to maybe 2350. The creek jump, though, that I'm interested in is the one that we drew out earlier. It was like that parallel, and it has gotten onto the outside of that. So this could be like a spring, but it doesn't really have a volume for it. Looking at this little micro here. Yeah, I'm not seeing it. There's just a lot of fear, I think, in the market today. I think fear is the name of the game. There's earnings coming up for a lot of these small cap businesses. There's FOMC coming up. You got the Trump charges or whatever coming through, verdicts coming through. Like all of these things are happening like at the same time. I think there's just a lot of fear in the market right now. So I really think that's probably what we're seeing today on the whole. And maybe that's part of the reason why we're not holding very strong. GME's been doing pretty well though. I mean, all things considered, I know it may still distribute again, but there's still that gap. But I think that they, on the whole, it's been phenomenal how well it's held up. $22 really is doing well. I wish I could say the same for AMC, but it's just not been holding up as well. We're still positive from where we were months ago, but you know, I'd rather be at 4 than at 250 or something. But all right, so FFIE made that drop. So that was like right here. We were talking about like it could potentially advance, but it's also got the setup for the drop. So everything's kind of taking a bit of a lower route today. AMC's volume looks pretty low. I mean, Fridays always have decently low volume, but by comparison, usually to other days of the week. But this particular volume here does not look crazy to me. So after that big sell-off, it kind of dropped off. I would not be surprised if it, like IWM, got like one more dip here to get to that 403 mark. Yeah, it wouldn't surprise me. This doesn't really look like a bottom just yet. I guess it could be, but it looks more like a flag action to me. And it went back beneath this. This was my other like creek line. That became oddly tight. How did I even do that? I wonder if that's the parallel. Oh, that's why. That's the parallel. Okay, good. Yeah, all right. I was like, that shouldn't be that correct. I was like, because I did doodle it this morning. I couldn't even find the right point to hit. This is one of the parallels. So this is the one we left behind. There's a number of ways to kind of draw it out. But this is one that I would use. Is it the parallel? That looks too steep. What are you saying, Booksy? It's not the parallel. Well, we're pinched between the parallel and the downtrend. You see that? I don't know how I drew this, but I drew it, so it's done. Doesn't make any sense why it's so accurate. I must have done it. I don't know. I honestly don't know. Don't you love when you do that? And you like, I have no idea where that came from. Why did I draw that line the way I drew it? I can't even see the other point on it. What? Is that the... Oh, that's from the top. The 1330 top. Okay. This is one of the fan lines I've been using. So what I've been doing is like moving it every time. We kind of make a new outward high. So that's what that is. It might be a good way to see the narrowing here. So I still think it's still crazy how tight it is here. But I didn't anticipate that being like a main factor today. So we're on the parallels right below us. So that's this white line right here. And then this is just one of those fib fan lines from like way up high. We're kind of boiling up against it. We're kind of in a pinch point, aren't we? Yeah, if you move this out a little more, I think it'd be more accurate, but yeah, anywho. This doesn't look awesome, though. We'll see. I guess I shouldn't be unhappy if it's holding, but I don't know. I don't like this kind of choppy stuff, like a flag after a downtrend. Well, real estate's all up. Both these real estate trusts are up today. They don't seem to be reacting. IWM made a bottom, at least for now. I think this might actually be like a spring. So I'd be pretty bullish on this if it can find support over 204 again up here. And then, so there's kind of two levels that I'm looking at. 204 and maybe 204.20. And I've got a marker up here that I think is going to be like the breakout marker if we do move 204.40. We might see a market-wide turn today. That would be pretty incredible. I know it might seem unlikely, but the setup is there to kind of continue if it can make the turn. So it's got to get over this trend here, and then if it does, I think we're going to see it advance. If this were like a creek, I would expect it to come up and retest maybe here at this low, 203.79. It found support at 203.79. Could do that now or I could do that later. And then continue upward. It's kind of buying back, it's kind of selling back down to that level repeatedly at 203.80. Those wicks. Let's go to the 1 minute. Yeah. So auto reaction, phase B top, bottom. Maybe a spring. Bit of a triple bottom here. I think it's probably going to go, but I guess we'll see. Speaking of March bottoms, doesn't this look a lot like that March bottom? We were just talking about that. It's just really small. Looks a lot like it. It's like a micro version of it. Micro machines. So then I would expect this to go up to, if it does work, something like this. I don't know. It could be a good trade today. That's divergent too on the 1 minute. This bottom and this bottom. It's really micro, but whatever. I don't know. I might trade IWM. I like this setup. So I'm going to see what I can see here. I don't think I would enter now because nothing's really confirmed yet. So, but there could be even a chance here to enter and then not like want it to go back below. So see it move here, like, and then have a 50% retrace. So you go to 204.69, then go back down to 204.28, and then it really would take off back to the upside and start working its way out. Then you can be in for like a longer term trade today. I think it's possible though. A lot of time left in the day. I don't know what I would trade if I did trade it. Maybe like really short term, since I would probably be in and out in the day. I wouldn't hold this over the weekend. Not likely. Maybe a week out then. Expiration. So why am I interested in this right now? Well, it's not just because I know the max paint's higher, but it's also because I think it's in a position where if this can bottom out and breach here, we're going to get a decent run up. I think it's set up for it. to make good advances today and to recover quite a bit. So I'm really just playing like a bounce. There's nothing really else about it. And I think the whole market, all the small caps will probably get a decent little recovery. So $207 strike for next week is kind of expensive already. I don't really want to go like too close to where we are. Get some really cheap stuff if you go like out to like Monday. I'll do 3 times since I think it's going to move today. I'll go 1, 2, 3 days out. That's reasonable, I think. What I want to see is support and then push. I don't want to see like a hooking action here, so there is a small chance that it fails here. It's kind of the same place it would break out, like right there. But once it moves beyond there, you can see like it's already kind of pushed the little lower creek. Maybe you can't see it because I'm not zoomed in. But it's doing kind of what I expected it to do, and that's a good thing. So I think it's a bullish. So I went ahead and picked up some contracts for June 5th. I'm playing it risk on right now. So this isn't a play that is like not risky. It's risky because it's not technically confirmed that breakout yet. Yeah, it's having some trouble. But it hasn't technically confirmed that breakout yet, and then it has to, after, even if it did break up to like 204.60 or whatever it ends up being, you're going to want it to find support again at 204. So basically, if you're on the 1 minute, you just want to see it jump the EMAs because that's where it's lining up. Like you want to see it jump the 180. It ends up being pretty much the same level as that 180. So my expectation was that we would bounce here and then you continue up. So as soon as you break above 204.11, there should be a decent push. You get like a bigger push up. Volume is kind of a mixed bag though here. Seeing a lot of selling here at this top. So that's not always great. You can see what the, usually there's a breakdown, so I'm not worried about that. I'm only really concerned that it holds that creek. I don't know where it's going to be. Hang on. Like it's okay if it moves above and then below this one, but then it has to hold here. I'm trying to think of where it's at. It should be like there. Yeah, so it's probably going to coincide with like a previous bottom, like 203.82, this area. So if it slid back beneath here and started dropping, I'd be really pretty bearish, like this area. And if it comes back above, it should just pop right above 204.09, quickly find support, and then move into a potential SOS range. This M cross is like super low. Anyways, we'll just kind of wait it out. There's not much to say just yet. It's trying, but this also could be a like an M cross down, and that's sort of a danger here as well. So saying like this is where we'd have to go. So the risk on is that I probably entered too early, if that's the case, because then you have a yeah, you have a potentially big drop right there. It would sell down. I don't know where it would go. I'm not seeing buyers step in. Well, I'll just set a tight stop, and if it doesn't work, it doesn't work. I'll just go about my day, not worry about it, or find re-entry later. This happened to me the other day on IWM too. I entered too early, and then I ended up coming back. Still made money on the play, but you also have to make sure you don't lose too much. It's already made the 786854 retrace here, so it's already at the bottom. I think the next low would just be back to 203.27. So just a full-on reset of that move. Yeah. Oh well. Doesn't look like it wants to hold. We would have wanted to see like buyers step in and push it up from here. And I'm not seeing it right now. Looks like it's sliding. Bummer. Oh well. We'll be patient, wait it out, see what happens. So if it doesn't recover, I'm thinking maybe AMC might go ahead and drop down to that 403 level. I would say again, but it didn't happen in regular trading hours. So it'd be like this is like a failed, it'd be like this being a failed rally as well. Yeah, it's dumping it. And then dropping to that, probably down low. It's okay. It happens. Too early. Should have waited. I mean, it's not out of the question that it recovers, but I think based on what I'm seeing here, it's not looking too hot. You know, there's a bottom at, what is this number? 203.73. So this is like what happened yesterday on AMC. It's kind of like you're waiting for like every possible bottom, but it already sort of rejected the advancement here and fell back beneath both creeks. So you're getting a double sell because you've got two rejections basically at play. So typically that's a sign that you're going to go down lower. You can see it, how it worked out. Yeah. Yeah, I don't know where it goes now. Just low, I guess. You can't break beneath the previous bottom without significant lows. I think if it goes too low here, I don't know. I don't see how it stops until it goes back to 203.28. So yeah, I think sellers are really taking advantage of the news today. Yep. Just dead. Oh well. Like I said, it happens. Should have been patient, waited for better entry. Now that slide's occurring. We'll see if AMC takes its slide and goes down to, I don't know, it hasn't broken yet, but it wouldn't surprise me if this did a drop to 403. Well, my stop loss didn't trigger. It didn't drop value enough to trigger it. So when I play options contracts that are volatility on, I usually put a 30% to 50% stop. Just depends on what I'm putting into it. 30% might seem like a lot, but if the price moves just a little bit, if the volatility is high, it's going to jack up your... So there's different kinds. Like if I'm looking at, like, if I already have confirmation, then a lot of times I'll put like a trailing stop on it, or I'll just put a stop right where I entered. If I don't have confirmation, I might have an idea in my head about, well, here's how low it could go, that kind of thing. Usually that 30% ends up giving it a little bit of wiggle room in case it slides a little bit and then goes. Sometimes that's okay, and then sometimes it's not really ideal. So on the 15-minute, it's just like taking it down. It really looks like it's trying to distribute. I wonder if we're coming back to this creek. Yeah, probably. We already hit it once. I think we can come back down again. This is silly. Price action. Yeah, anytime you see this kind of stuff, always best to wait. Jump the gun. Should have just waited. Because now the downward motion here could go pretty far. Basically, it could pull a full throwback to this bottom earlier. And then you're at risk of like gap fill, right? And you're just like, oh crap. Well, and then why don't we just go down and fill that gap? 202.32. Totally possible, you know. So yeah, so you got to be careful. I think it's an odd setup. It seems to me that there's a there is kind of a double intersection here down at the full retracement at 203.25, but it would be really odd to see this flush all the way back down and then go all the way back up. So I'm thinking we're probably not gonna, I mean, I guess it's not impossible, but it just seems like we're gonna miss it quite a bit. I think that would indicate we're probably gonna go pretty low. This is like a double top. Almost like a double rejection. We could end up coming way down. Maybe this is how we get to 200. If it doesn't hold here, I don't see why not. The way this is set up. Then you've got a gap and then another gap. It's like driving you down. I don't know what that would do to AMC. Just having like massive red days. A couple massive red days on small caps could really affect AMC quite a bit. I mean, this all happened during that fall down. I mean, you've got a huge amount of retracement happening on AMC during a pretty simple turn down on IWM. I mean, I guess there's some resemblance there in terms of like percentage pullback, but yeah, that could be what brings us low. Oh well, Booksy would have been really wrong, so some of y'all are like, what else is new? I don't know, AMC's still holding here. I think it's a little odd, but the volume's kind of flat, so who knows? As soon as volume steps in, you could have it turn pretty quick. FFIE rejected at 55. GME's still sitting at 2220s. Really just kind of sitting here. It did hold above the creek, so we'll see. Yeah, so the apparent weakness here in IWM early is it's not really showing that much right now on some of the stocks we follow. ChargePoint is getting beat down. It's all basically it's the same deal as IWM. It looks like it's almost erasing the entire move from Wednesday. Ugly stuff. It does have a distributive action at the very end. That wick came up a little higher and then it slid back down through support. So there really wasn't much to stop it from going down at that point. That was pretty clean. Okay. Well, so what I may be doing today is yeah, it's going to go down pretty low, I guess. What I might be doing is, and then there's that divergence we were talking about in the 1 minute. See how it like didn't even bother to pan out. It just like doesn't matter. You probably would see that higher time frames. Yeah, this same deal. It's kind of like it's not broken. It's still technically higher, but it didn't make that move back to the upside. So it hasn't like continued any kind of move. Instead, it's making lower lows right here. So that top divergence we talked about as like a potential turn ended up still playing into it, you know. Like technically we didn't come below here on the bottom. I think that's a hidden divergence, but it's easy enough to erase it. All you have to do is kind of wick down to the bottom and you're done. So you're only a few cents away and then it's gone. And there's nothing really to say about it anymore. So it would not have taken much. I really don't think. It would not have taken much, I think, to turn it around. But if buyers aren't interested in taking it up, and there's not enough buyers for it, sellers are driving the news, yeah, I think we're going to see a slow day. This top ended up being kind of like a head and shoulder, but in reality, like we might be seeing like a rapid fire version of this sell-off. So even if we did get some upside today, it may just be like a hook, you know, and end the week at like 204 or something at this point. Yeah, no point in wishing for some kind of miracle to happen here. I think AMC is going to drop. Oh well. My stop loss will trigger any minute, so probably exactly what happens is it triggers and then it reverses. typical. I don't know. There's still a lot of room here to move down, so you can kind of keep wishing that it would turn, but if you're in a bad trade and your stop loss triggers, so be it. I knew it was risky. It had to hold right here. I should have just made a tight stop, but I gave it too much wiggle room. I thought it would move faster. So usually if you give it a 15 to 30% loss and it drops like this, it usually happens pretty fast. The value of those contracts didn't drop very quickly, so it didn't trigger. It is what it is. Okay, well, I mean, the way things are going right now, it doesn't look like we're going to get to max pain on either, but I guess it could change quite a bit. The day's only half over. It's still got like, 4 more hours of trading to go, so you never know. Things can change pretty rapidly in the market. Maybe I'm not looking for the right things here, in this movement, but so far it looks like it's kind of done the move. It's just everything's really flat and low. We didn't make that advancement. That sell-off was kind of the highest volume of the day, and it clearly was an effort to keep us below 430. So without stopping power or buy-in power from buyers today, there's no real trap to speak of, Talk about bull traps or bear traps. This would have to be like a bear trap day to do what I thought it was going to do. And in order for that to happen, you would see something like almost miraculous, right, with a rebound. Maybe it'll happen, but I'm not going to sit around and watch it bleed out. If it just bleeds out today, I don't have any desire to do that. And I got to do some animation work today, so I'm going to focus on that. I think we kind of did a recap of everything so far, and I don't feel like there's much else to say. I'd have to come back later and look at IWM, for example, to see if this, for example, we don't know yet. I mean, if it just comes up and it hooks today, then I'm inclined to think we're probably going to head to 200. If we got a really good rebound, and even if we closed up here at like 205, there'd be a lot less certainty about that. I think you could still see another high, but it's fairly straightforward here. Like if you leave the trend and you generate a hook, then there shouldn't be a strong expectation of upside next week. And that's just kind of the way it is, So there's still a higher amount of, bullish participants in the options chain on AMC, but IWM has flipped pretty bearish over the last few days. So I wouldn't expect it to be, even with an upside. That's the thing, is like, even with an upside push to near 206 today, it's not like I was thinking it was going to continue necessarily. I've been looking at this in the big picture thinking it's probably going to go sideways and maybe down a little into FOMC. So I'm sitting here kind of shrugging my shoulders, like I don't really see, same for AMC, I don't really see this upside as permanent. I think it would be just to go back and retest a level and then probably slide for the rest of the 10 days or whatever it is. That's just where I'm at right now. And I think, frankly, the way this is setting up, it's starting to look a lot like what we maybe thought would happen. So we're going to start seeing, if this continues to narrow, then it's a macro diamond structure. And I don't know how it's going to play into earnings and FOMC, but I'm sure that they'll play into those one way or the other, up or down, on GME, because it's set that way. And it's a pretty tight structure here. So what I'm suggesting is that we might be playing out a much larger version of what we saw in the micro here, to try to drive the price back down to the creek 14s going into earnings. it doesn't have to go lower. So if it pushed down and it held at like 19 into earnings or 20 into earnings, I think that would be very, very bullish for GME as a potential bottom here. But again, I'm just kind of going off of what already happened. And we did push low on this previous one, so hard to say. I'll have to do a recap. I'll let you guys know if anything drastic changes. You know, obviously, if I leave the stream and something crazy happens, something crazy happens. But I'll let you know in a recap vid if I think there's any major change to my particular outlook. And I'm going to keep my finger on the pulse of IWM and just see what happens with the small caps on the whole. I think that there's an importance there to not like let that go, not let that slide. So FFIE is trying to bottom here. The volume is kind of shrunk out of it on this rebound. So if it can get back above 55, it maybe has a chance. If it gets stuck and pinned here, it's probably going to just drop again all the way to 50 this time because it didn't quite get there. Got pretty close. But this might be a really good trade if it can finish this move. It looks just like everything else right now, doesn't it? Like an S-curve kind of move down. It looks like everything's trying to like reach down to get to something, and then possibly we see a recovery mid to end of day. AMC hasn't really finished its move down, so I don't really know. I don't know if it needs to still go. Doesn't it look like that though? It's like everything's kind of doing the same thing today. So I'm not sure. When is it finished? It's a good question. Don't know. IWM's officially made like a full throwback now. So it's basically like a double bottom until it isn't, right? If it continues to break, then I just look at it like a giant S-curve. I do think it's going to go for the gap. They'll probably just continue until they can get down to like 202, 30s. And if it holds here, I do think, you know, reversal, but maybe we'll see. I'm not really positive about anything else right now on this. I think this is going to end up being our battleground, these two trends. Maybe 3 here now. So there's a lot of time, a lot of chop could happen. Yeah, not looking great though. So for a turn anyways, it looks kind of weak. It can change. It just has to work itself out. And if it doesn't, then I just, again, continuation I think is just going down to 202 or whatever. So, all right. You guys have a great weekend. I'm going to... do you think monthly candle closes? Sure. I mean, it's all relative. So... you got to look at like the big picture and just say, you know, is it a bullish candle? I think if it is, that's good. I don't think it always matters as much as we hope it matters for AMC. So there's things there that are important to take note of. I still would think, oh yeah, if it's a bullish monthly candle, that's good news. But we've seen candles on AMC that looked really bullish on the big picture that didn't really amount to much. Scale matters, time matters, so one bullish candle on a monthly may not determine everything. But over the course of a few months, yeah, I think if you get a lot of sequential like candle action that looks really good, sure, you know, I think it is important. I think it's a positive. So, all right. Well, I know that some of you just got back, but I'm actually heading out. I probably will do a recap today, but I don't think I'll be streaming again. So, you guys have a good one, and I will talk to you later.